Okay, guys, so welcome to today's trade recap. This is a new series I'm going to do on the channel. Basically, I'm going to do a recap of my trading day, what I did, what I thought, the things I could have done better, things I've seen after, everything. So, to start it off, if you are not a trader, you probably will not understand anything I'm saying to you. And also, another thing I want y'all to know is this series is not for y'all to learn. It I I do think you probably could learn from this, like watching these videos, but this is not meant to teach you anything. I am not a mentor. I can help guide you to get to where I'm at, but I am not a guru. All right. I've been doing this for less than a year. I've made money from this, and I'm trying to get more consistent at it. Right. This is my job. I do this now full time. I want to document my journey with y'all. So this isn't to teach y'all anything. Later on, when I get better at trading and when I'm a more confident trader, then I may end up dropping some series on my strategy, explaining my strat. But for now, I'm just gonna do basic breakdowns, nothing too crazy, right? So, coming into this day, right? On this is MMQ, this is ES, right? So, coming into this day, I had a bullish bias, right? I actually had a bearish bias, if I'm gonna be honest. But I had a bullish short term bias, right? I wanted to see the new week opening gap get filled. Now, what a new week opening gap is basically every week if the weekend the stock market is froze, so orders still move during that frozen period, right? Um, People are waiting for the stock market to open, right? So when the futures market opens at 6 o'clock on Sunday, the market, depending on the news, will either gap down or gap up. And this is known as a new week opening gap. Now, this new week opening gap is a strong draw on liquidity. Price has a 70 to 80% chance of filling it same day, right? So it's a very strong draw on liquidity to take. And if you see my trade here, that's exactly what I took. I should have taken profits right here. I didn't, but let me walk you through this. So, on the hourly time frame, before we even had these candles, let's just ignore these. When I came in, the only information I had was this from the 7 o'clock candle. The 7 o'clock candle right here. We had a ways to go to fill this gap. And what I wanted to take to be able to fill this gap is a retracement. So a retracement into a 15, 5 minute, uh, or 30-minute PD array that then after I see a retracement, I need to see this. I need to see it wick away with strength, right? Wick away with strength. So boom, this is that wick, right? We came into a 30-minute gap. This is came into a 30-minute gap with this wick. Boom. We look for our entry now. So go down to the 1 minute time frame. Boom, we have an entry right here. It's for value gap. Gets tapped into right here. This is your entry. Your stop can go here or here, right? My stop was right here. So boom, your stop's here. TP, my TP was all the way up here. Now, the reason why I exited this trade early was because I also had a bearish bias. My thing was, if price did not manipulate these lows, let me go to them. If price didn't manipulate these lows, then I knew that this was probably going to be the move of the day, and this is where the market would want to magnet to, right? And this is exactly what happened. After price came into this 30-minute fair value gap, it was a gamble, right? Not a gamble, but it definitely was a risk. I did not know if the market would want to push up higher past this and keep pushing, or if the market would want to come down and take out these orders. I had a strong, very strong suspicion that we would come for these equal lows though. So because of that, that allowed me to take profits as soon as we inverse this, because this is a short entry, right? This short entry also played into this short entry, right? There's a short entry here. If you took this short right here, Now, I think this is a risky trade, and I took this on an eval. We didn't get any real manipulation to anything, right? Other than this manipulated up into the new week opening gap. But I don't like wicks as manipulation. I want candle closures as, my manipulation, right? I want strong manipulation candles. But this was a manipulation, right? Boom. We come up, go down, come up, right? You make a fair value gap higher. Boom, we came up, inverse this gap, right? If you put your stop up here and you held this all the way down to those equal lows, you would have hit for a very nice, like one to, I don't even know. You would have hit for a nice trade. But the reason, and in hindsight, I wish I would have taken this. The reason I didn't take this is because I was bullish. Last week, we were super bullish, and we seen all last week that every time we would retrace into a 15 or 30 minute, that would be enough to send us higher. We never had to sweep out any lows to go higher all last week. We never retraced into these lows real deeply, We didn't come into this Asia low or London low. We often would just come into a 15 or 10 minute, 15, 5 minute fair value gap made on at around 7 o'clock, 8 o'clock, 6 o'clock, and we will go higher off of that. So, with this in mind, I thought that we would stay going higher. Now, I still won on this day. I took a light profit on both accounts. So, I'm not mad. And this was my only trade of the day on these accounts, too. So, I'm pretty happy about the results. I will be back tomorrow. I hope that we continue to get clean price action because in my opinion, these longs were clean. These are clean longs and these shorts are also clean. If you had short bias, these are clean shorts. So I think that today was a good Monday. We had two biases play out. It both sides made money today. At very least to me, if you trade inverse fair value gaps, you should have gotten break even today. If you didn't get a break even today, you most likely did something wrong and we're trading emotionally, right? So I'm gonna be back tomorrow. That's all for today.